Good afternoon, everyone. Welcome to the post-lunch graveyard shift. I hope everyone didn't eat too much of that delicious food just now. I know everyone enjoyed all the great networking. I must say, I'm a terrible one at networking, and it was actually a great, relaxing way of doing it. I think you'll all agree. My name is Andrew McCartney. I'm a lead financial sector specialist with Asian Development Bank. I'm also a gender specialist. And on behalf of ADB, it's great to be here. I think this is my 7th annual summit. I think I was on Ines and I were just talking just now. I think we were both on our first summits together back in about 2012. The topic of today's discussion really is around innovation for debt finance. And it's unfortunate to say that it's as relevant today as it was back in 2012, and some would say it's actually more relevant today. And indeed, I think one of the things that we've seen in Asia Development Bank is post-COVID, a lot of markets have actually moved backwards in terms of both financial inclusion and also particularly access to finance for women. And a lot of what our sales and other IFIs are trying to do is trying to reverse that trend whilst also focus on other things. So debt finance, innovation, women, access to finance, what are the issues today? So I'll just give a quick overview and then I'll quickly turn to our esteemed panelists and then I'll turn them over to you as well later on. So we all know that women-owned businesses, women-founded businesses deliver excellent results, often twice the revenue per dollar. And once established, women can be very successful, but access to finance remains a key barrier. We heard statistics earlier about less than 1% of venture capital goes to women SME. And the reality is despite so much progress in many markets, the reality is that many women still rely on their savings, families, or don't borrow at all when it comes to supporting the growth in their business. I think the challenge we have is that a lot of the barriers that underpin this issue relates to a combination of regulation, supply and demand-related barriers. So supply issues whereby, for example, the finance institutions don't adapt their lending models suitably to promote access to finance for women, through to now increasingly on the sales channels can also potentially crowd out women, particularly now with digital and digital inclusion being a key thing. I think the other aspect with supply, in my experience working with a number of banks, is that there's also many different shapes and sizes when it comes to women entrepreneurs. And whether you segment based on turnover, or whether you segment based on sector, or whether you segment based on life cycle, there are often between 3 to 6 typically profiles of women that you may be wanting to support. And if you take a typical life cycle where you've got emerging and startup businesses through to growth stage, through to mature stage, what you find if you do the research and develop your propositions around this is that women actually need very different things and have very different barriers at each different stage. And you need to take that into account. And then, of course, there's the demand side. And I think in many ways, this is the area that needs still a lot more attention, whether it be financial literacy, digital literacy. Now climate literacy is becoming a bigger and bigger issue. But we still have a lot of the underlying constraints in many markets, like access to mobility, access to information, access to markets. And banks and finance institutions and regulators can all play a key role in trying to overcome. So it's this combination of addressing both the supply and the demand challenges that really puts you as financial institutions right in the driving seat to develop propositions for women. So this panel today is really going to showcase some great examples from around the world in terms of how a quality financial institution addresses those supply and demand challenges when it comes to financing for women. And what I'd like to do is introduce the panel now. We have Rachel McKenzie, who's Executive Manager, Customer Experience at Westpac, one of the oldest banks in Australia, and one of the founding, what I would call, if not the founding bank of banking on women globally. So very much a market leader with their Ruby proposition. So welcome, Rachel. A big clap.
Thank you.
Just make sure everyone's awake. Then we have Michelle Miranda from Banco Nacional, the largest commercial bank in Costa Rica. They have a very scaled women program for women SME, and have now recently expanded that into many more segments of women. So welcome, Michelle. Big hand.
Thank you for inviting me.
Then we have NAOMI from one of the NDELE, who's from KCB, head of SME banking, from Kenya, one of the top, if not the top, maybe, or is it equity? I'm not sure. Anyway, one of the top Kenyan commercial banks with a very large women SME portfolio of over 500,000 women. So we've got lots to talk to her today. So welcome, Naomi. She only just got her visa. She only flew in a couple of hours ago and is looking very, very fresh indeed. And TOHAMA NABULSI, the director of the Microfinance Fund for Women from Jordan. So she's here today to really talk about how they've migrated their women entrepreneurs out of the group lending model into the women SME model and how they've done that. So without further ado, first question to Rachel. So you've got the long-standing Ruby program. I remember studying it back in 2012 and being amazed by all its different components. And you had a lot of experience in this sector. So when it comes to the supply of finance for women, what are the three important things you think Westpac has been doing on that front in terms of supply of finance?
Thank you. So I think there's three major things that we've been consistent on throughout the establishment of our program. It's knowing your customer, and it's knowing, we have a saying at Westpac where we've got the customer at our heart, and so that involves research, and we've always been very good at researching our customer base and understanding what they want. It was the whole impetus for starting our program back in 1999, where we did a piece of research, and it told us the women that were dealing with our bank were not very happy with us, and they didn't actually appreciate the way they were being treated, and they told us that they wanted more information, education and networking. Back then there wasn't a plethora of networking events there are today, and so that really set us up for our Women's Markets program. So we've been consistent over many years of doing research and finding out as women's needs have changed over the many years as well. In 2008, for example, we did some research and told us women were using the internet more. They wanted their education online to access it in their own time. So we set up the Ruby Connection website for that purpose. Today, we're doing research on female entrepreneurs and some of the things that they find challenging and presenting that to our bankers as a form of training, which I'll talk a bit more about that later. So research has always been core to giving women, finding out what women want and providing that to them. Education has been incredibly important in giving women the confidence to come and talk to the bank, to actually come and have a conversation with us. And you have to earn the right for women's business as well. And you have to do that through providing them with a lot of education and information to help them, A, start their business, grow their business, and basically give them the confidence to have the discussion with you. And you have to earn that right. The other thing we've done is a lot of recognition. So over the years, we've done various awards, which has amplified our position in the market as a bank of choice for women. We've done the Women of Influence Awards. We've been a long sponsor of the Rural Women's Awards, which celebrate women in our region, women business owners in our regional communities. So we do a lot of work around amplifying our position as Bank of Choice for Women to enable women to have the confidence to come and speak to us. I think we've always had the money there to lend. It's about women having the confidence to being able to approach us.
And I think that's a really important point, is that at the end of the day, Westpac does not have women-only products. They have women-inclusive products.
Yes, that's right.
And I think this is also something that's a little bit different to other markets where there are bigger barriers for women, where there may need to be additional innovation to actually allow the women in. But thank you for that, Rachel. Michelle, like many markets, the majority of women SMEs at the end of the day don't qualify for bank SME lending, and I'm sure Costa Rica is no different. Can you share your experience in terms of cash flow-based lending? It's something we all have heard of. We've all preach it, but very rarely do we actually see it working in practice. Can you share some of your experiences with your cash flow-based lending for women and what impact it's had on your business?
Yes, of course. As you know, usually banks request companies to provide their financial statements as a part of the credit analysis or an income certification. But we know that sometimes it represents a cost for the customers, especially when we are talking about of SMEs. And that's why we understand that request financial statements can be a barrier for SMEs in the lending application process. So we have established a methodology of payment analysis, payment credit analysis, that is based on a cash flow. And how this works. Okay, well, what we do is that we have trained our sales force in a way they can help our customers to build the cash flow. So what the client does is to provide the register they have of their own business, of income, expenses, and the specialized sales force build the cash flow for them. So we simplify the way they can access to the finance through this methodology. And in this way, they don't have to incur in that kind of cost. And we facilitate the way they can access to it. We do that because we are a Central American country, and like that, we have like 80% of clients that operate as a natural person. So like that, we can include all these people that has business, but they are not so formal yet. So that's been our main strength to offer this sales force that has the sensitivity to analyze that for them and go through all the process on lending process access to them. Actually, the executive, what they do is to project the cash flow for the next 6 or 12 months, considering the business dynamics, but not only the business dynamics, also the family dynamics. And that's a comprehensive way how we can, or that allow us to visualize this way, the family in a holistic way, so their capacity of acquire and healthy debt. Also, I would like to tell you that lending application process allow us to see another part of the business, because some of them have a cycling dynamics, like, for example, agricultural activities. They don't have incomes all the time. So this cash flow-based credit analysis allow us to see the projection of the business for the next months. And that way we can allow them to be able to get finance.
Fantastic. Thank you. And on a similar line, Naomi, from a KCB perspective, clearly you've got a scaled model. You've got 500,000 women SME clients today. Can you share how you do your cash flow-based lending, and also how you're able, given the potential for how time-intensive it may be to sort of bootstrap the financials, if you like, how can you scale that model?
Thank you. Thank you for having me, and good afternoon, everyone. From KCB, I must say it has been a long journey. And listening to Westpac and the journey of how we even started the cash flow methodology, we did a survey in 2016, 2017, because we realized from our database that the number of women who were borrowing compared to the men in business was very, very small, less than 10%. So there was need to scale that and provide this credit facilities to women. So from the study, we realized that the women's needs were totally different from the men's needs. And from a cultural perspective, one of our key requirements for borrowing was collateral. And definitely from the cultural aspect and the way the family is set up within our country, the women did not have any collateral. So that was one of the things that was holding them back from borrowing. The second thing was the records. And the normal lending practice is they need to bring financial management statements, audited accounts, and the women were like, really, we don't have those documents. How can you lend to us with the records that we have? And what was the records they have? They write on their books, they have telco statements, and we adopted that as one of the ways of doing the credit assessment. So the journey, like I said, has been long. We tried it over a long period of time because it was a new methodology. We had to do a lot of back-end reworking of the SME model to accept those new ways of analysis, and even to how do we mark this is a female account, because generally all the accounts were just customers. So all that formed the way we were looking at the analysis of the credit analysis. So with that remodeling, and also, like I said, the cultural aspect is very driven, is male dominated. And so even the feedback from the survey from the women was when they come to the bank, they don't feel appreciated, they don't feel recognized. And that already put them off from coming to borrow from the bank. And they would go and borrow from their groups in group settings, which we call chamas. So the remodeling of the SME banking was from a people perspective, where we had to bring the gender intelligence aspect up front to enable the male and the female staff to deal with the women differently. And then we also had to look at that credit aspect. So with that, we have seen over the years, the last 7 years, a lot of goodwill from the women. We have 500,000 women customers who have borrowed through this methodology. We currently have an outstanding loan book of about $330 million and deposits of almost $380 million. And the women are really looking to access finance using this cash flow methodology. So we have adopted a model where up to 3 million Kenya shillings, which is about $30,000, they don't have to provide security. So that has enabled the women come in, borrow short-term loans of up to 3 years, 36 months. And over the years, they're able to borrow even larger amounts. They have acquired security, and now they're able to even get larger loans. So additionally, we have seen, just looking at the book, the performance of the loan quality, again, it goes to prove that women do pay, because the non-performing loan book is less than 5%, and we have seen the net promoter score also grow from less than 2% to 62% over the last 7 years. So a lot of success in this proposition. Like I said, it took us about, it's 7 years since we started it, but we launched it out in the market after piloting for almost 5 years, and we launched it in 2022, and our proposition we call FLAME, F-L-M-E, which means Female-Led and Made Enterprises. Thank you.
Fantastic. No, thanks, Naomi. Now, as we know, a lot of women today come through the microfinance model, particularly through group-based lending. And what we see in a number of markets is that it can often be quite hard or challenging for women to kind of break out of that into more of a growth trajectory out on their own or as a group. In terms of, so the Microfund for Women, however, you have group lending, but you've been able to channel your high potential micro women that are heading towards more the SME end of the market into a separate subsidiary to be separately managed and financed. Can you just talk a little bit, that's a very interesting sort of graduation model, if you like, and often quite rarely seen. Could you just talk a little bit about how you identify these high potential women, what sort of support and financing you provide them, and what you do within this separate subsidiary, Sandicom?
Thank you, Andrew. Well, it's definitely a million-dollar question. How do we transfer women from being in microfinance into SME? Are the women ready? Are they capable? Do they want to take this move or not? We see that women face many challenges through this process. Some women are just happy being in the micro business and they just don't want to move into the SME. They just feel that they don't want the hassle of like going through the legalization, formalization, taxation issues. And I believe that these should be dealt with very carefully, because sometimes they're just not ready to move. Some others do face the financial constraints, and these are our main target and the women that we should speak to. Others do not have the right access to the right markets to promote their products and services, whether it is locally or internationally. Some others, they're just not, they might want to grow their business, but they're still incapable of handling like big businesses in terms of like financial management, quality control, hiring people in different countries. So we see these as like many challenges, and each challenge should be tackled differently. And money is just one of the challenges. At MFW, when we saw that our women, the 600 women, were ready in terms of like their businesses were growing, they have good credit history, good repayment rate, we checked with them and we decided to check if they're ready to move into from microfinance to SME. Definitely, we did a lot of, we and our sister company, Sanatcom, did a lot of work. Part of it is like risk assessment. Are they ready or not? We checked their capability of like paying back. Second thing is like risk coverage, which happens in Jordan by a company. It's called, it's a governmental company. It's called the Jordan Loan Guarantee Corporation, which covers part of the loan if the women are defaulted. Obviously, we still had to offer some collateral flexibility in terms of, like, as Michelle mentioned, sometimes they do not have all the documents ready. Sometimes they do not have all their finances ready. So we had to be patient with them and wait until they were able to provide with such papers, in addition to many non-financial services that we provided. For Microfund for Women, with the support of Central Bank of Jordan, after COVID, they gave us a loan, which is like, it was a very low interest loan. We were able to provide our women with low interest loan and with very high repayment period. This made women comfortable and gave them confidence that they can take this loan and start new projects or like grow their current businesses.
Fantastic. So across each of the speakers, we got a lot of common themes coming through. First of all, the importance of research. First and foremost, absolutely. And not just your standard research. This has to be very women-focused and behavioral. Then there's the importance of trust, of building trust with, and education. So the importance of non-financial services. Adapting the sales force, again, whether it be digital or physical in the branch. Adapting the credit assessment methodology, risk enhancing, or adapting the terms of lending, whether it be interest rates, duration. And I think the last point, which maybe hasn't come up so much, is also, particularly now with digital and more moving towards open architectures, is also leveraging alternative data sources. And I think that's also a theme that's coming through more and more in many markets. So that's the supply side. Now, if we turn to the other key side, which is demand. At the end of the day, if we got the right products, but we got no women to borrow, we're still not going to get the result. And we know that women are less likely to borrow and take on debt. And when they do, they also typically will ask for less. So what would be good now would be just for the panelists just to share some of your experiences in terms of what's worked in terms of promoting demand and enabling the women to qualify, particularly for bigger loans as they start to grow and graduate up the life cycle. Rachel.
So we've recently done 3 things. One is build an ecosystem, particularly around startups and scale-ups. So we've partnered with 2 organisations. One is the University of New South Wales. They have a founders program. So we're picking up young women who are coming through university. They have 2 programs which we're involved in now, which is their New Wave Pitch program, essentially for women that are have an idea but don't know where to take it, and then their accelerator program. We've also partnered with a company called Fishburners, which is the oldest tech startup community in Australia. And with them, we're developing 2 programs, again, one based on an incubator program and an accelerator program. Between these 2 partnerships, we'll have a reach of 460,000 female businesses. The second thing we've done is, try to educate women. Again, it comes down to education. Educating women on the benefits of separating their personal and business, trying to show them the benefits of having business products for their business and keeping their personal separate. We do that by amplifying, again, through social media. We'll amplify our partnerships, again, as increasing reach. And the third part is our banker training. We did some research with a number of small business owners just recently, where we've videoed them, talked about the issues they're facing as female business owners, how they feel about the bank, how they feel about dealing with bankers, and we've been playing that back to the bankers to build empathy and to give greater understanding of some of the needs of our business owners.
Fantastic. And Michelle, do you want to just share some of your insights on this one?
Yes. As you know, we have a women's segment focus program since 14 years. We have strengthened and promotes women to reach their financial independence. How we do that? We have 3 pillars of this program. The First one is financial services. We include actions, affirmative actions in our tactical and strategy plan, like advertising, like marketing-focused campaigns, and in that way, we promote that women take loans more and more. They know the financial products in a way that they can have access to these products. And also, we have business support services that are very important for them. We do training. We have a virtual platform called Pimenauta, where our clients can choose their trainings according to their needs. And we also have Instagram profile where we provide them to financial education, because financial education is a key to them to understand, to be accessible for the finance services, and it works a lot for us. But once again, one of our main advantage that we have is our sales force. We have done a really hard job training them. Last year, I went personally through all the country to training these people, more than 600 people that have the ability to understand the difference and the barriers that women face, and they have some abilities to attend them, to make them get more and more financial services. So that's one of the best things that we have done to training our sales force in gender equality perspective.
Fantastic. Naomi, how do you build up demand with your 500,000 women entrepreneurs? How do you get the next 500,000?
Great. So we started a very aggressive marketing campaign called Flame after we launched the proposition. And with that campaign, we're addressing 3 things which came up with the survey that we did in 2016. And the women then said they needed opportunities to network, they needed knowledge and information, and they needed exposure where they needed to be coached and mentored by other women. So with the Flame proposition, we have very targeted Flame dinners and Flame breakfasts. We actually call them Flame dinner and Flame breakfast across the country, where we have the leadership team going round to meet women in sessions like this, and they just talk about Flame and how we are supporting women. We also have knowledge and training sessions where we support them with business development skills, how to formalize their businesses, how to do aggressive marketing online and otherwise, and through webinars and workshops. COVID taught us that we can actually do all this training in a more efficient and cost-effective way through webinars. So we engage technical experts in different fields to talk to these women, just to build their businesses and to run their businesses professionally. We also have a magazine we call Real Sense, and in this magazine we get customers to share their testimonials about how the bank has supported them and how they have built their businesses since we started the conversations in 2017 to date. And those testimonials give best practice to other women to enable them, learn from what other women are doing to make them successful. We have this all captured in a club we call Biashara Club, but specifically for the women, we call it Flame Biashara Club, which then brings the women together. The broader Biashara Club touches all SMEs. So that's on the aspect of the women. For the staff, we have done extensive training with partners who have walked the journey with us. I see them in the room, where we've trained the staff on relationship management, we've trained staff on gender intelligence, we've trained staff on the credit methodology, all to enable them give this service to the women with confidence. And putting aside the gender biases to enable them do an even better job. So NFS and non-financial services is really one of the things that has enabled us scale this up, in the sense that the women come, they learn, they do their businesses differently, and they're able to package their business in a way that the bank can support it through credit facilities. So it's been multiple ways of accessing, getting the women to access this credit, but through support in various ways.
Thank you. And last but not least, TOHAMA, do you want to share some of your experiences with some of the graduates?
Sure.
And how you support their demand side?
Throughout our journey of 27 years, we have learned that finance alone is not enough to support women. The finance has always needs to be coupled with non-financial services. And as Naomi mentioned, we have so many partners here in the room that supported MFW throughout its journey in many cases. When it comes to non-financial services, we have the training, which comes which happens through a MFW Learning Academy, a dedicated academy that is responsible for training the employees and training the MFW beneficiaries. Many courses that we offer: digital literacy, financial literacy, HR, name it, marketing, online marketing, and these do help women in their businesses. Not only we support them with offering them the courses, but we also support with the cash that they need to advertise on social media and Facebook. In Jordan, we love Facebook, and we're always on Facebook. So what we try to do, don't use Facebook only just for personal. Now you have to move into business and make use of Facebook to promote your businesses and services. Another thing that we do is that we offer them accounting systems, there's a law firm that can help them if they need legal advice. We have a taxation advisor that also help them with their taxes. Obviously, networking, marketing, helping them market their products, attending events. These all such activities add up to the well-being of their businesses, and they feel that they do have the support that they need.
Fantastic.
Thank you.
So as you can see, when it comes to the NFS, or the demand side of this equation, there's an awful lot more opportunity to actually differentiate yourself and actually scale up, whether it be academies, incubators, partnerships, social media, financial digital literacy. And in many ways, the NFS side becomes that much more critical when it comes to innovating the business model. But we've got about eight minutes left, and I know that the audience have probably got lots of good questions for the panelists. So I'd like at this point to open it up with the box, wherever the bouncy box is, for any questions. And if you could just say who you are before asking your question. We've got one at the front for Anne. Although I think we know who you are.
Yes, thank you very much, if I may. Good. Thank you very much for the very insightful discussion. I'm Jean Bosco Yachu from Access to Finance Rwanda. When we talk about innovations in debt finance, I always think about my conversations with capital providers. They all say, we have capital, but we don't have investees. You go to the investees or to women entrepreneurs, for this case, they say, well, we are looking for money, but we can't get it. And there's always a blame game. And I like your question around enabling demand. Now, I've heard of the different approaches that the panelists are taking in their respective institutions. And I wanted to start with Jordan. I think TOHAMA talked about, linking these women entrepreneurs with specialists, experts in different areas that they need support on. It will be, business plan, it will be legal, it will be tax advisory and so on, financial management. I wanted to know who is paying for that? So, can you sustain that?
So how are you paying for it? Okay, fantastic, sir.
My second, which is the last.
Sorry, we got 6 minutes left.
Yeah, just
can we just get a few more questions? You can come back in with another question in a moment.
Well,
we've got a lot of other questions. Thank you. Anne.
So it's on.
Sorry, I'm sorry to cut you off, but we've only got 5 minutes. And lots of questions.
Hi, my question's for Rachel. And Rachel, we see here in Britain that women are still having difficulty getting bank loans, and in actual fact, in the last year, it's got worse in terms of the ratio of men and women getting bank loans even, and the size they get, etc. Is that happening in Australia too?
Look, I think yes. I think it's with.
Sorry, can we just answer? Yeah, we'll just get a couple of other questions.
Oh, okay. So
behind.
Sorry.
Love that, Ines.
Catch, no, it's good.
Oh, I probably broke it. Can you hear me?
Yes.
Yeah.
Okay. So, thank you so much. My name is Janet Oplot. I'm from the Gates Foundation. And my question is to no one specifically, because I think all of you will have something to say. I want to understand your experience around how you have managed to convince credit departments to change their underwriting models. Typically, that's a problem. And then in doing that, how does that benefit women below, at the bottom of the pyramid? It's easy to do that for women who can keep their records, upper end of small business, medium business, but the guys at the micro, where the pipeline comes, how have you adopted that to those women specifically?
Okay, thank you. All right, TOHAMA, do you want to answer the question on the NFS and how do you pay for it?
Some of the activities, we do it, as I said, through partnerships with local and international partnerships. Sometimes it's like international donors. They support us with in some areas. And others are fully covered by microfinance, by Microfund for Women. So it depends. But sometimes, yes, we do have to pay money, to spend money on our non-financial services to make our financial services work better.
And I think just to add to that, when you're developing your business case for the women banking model, if you build the NFS costs into that, it is still a very profitable business. And I think that's one of the things, is to actually understand what it's just a business cost to ultimately help grow your business. Rachel, do you want to answer Anne's question?
Yes, I will. Thank you for the question, Anne. I think retail banks traditionally have had a hard time with their risk profile dealing to startups, and it's had to change. And in Australia, last year, we announced a $500 million fund particularly for startups and scale-ups. Now, that had to mean that we changed our risk profile slightly, and so for startup loans, we limited the amount they could borrow to $50,000 for 3 years, but it's unsecured. They have to be in business less than a year and only provide a business plan, so they don't have to provide financials to get that loan. That has been a big change for the bank. It's taken a long, long time. There's some of us, I know Kira's here, who's ex-Westpac Women's Markets as well as myself, were lobbying for that sort of thing for a long, long time. But it takes a long time for the banks to change their views. Our scale-up loans are up to $1 million for 3 years. They have to be in business for 3 years and provide only 1 year of financials rather than 2. And within that time, we've lent 316 scale-up loans and 42 startups for 107 million so far. So I think we're getting some traction, but it has been difficult because you have to change your risk profile to do it.
And just anyone to respond to the question from the Gates Foundation?
Okay, maybe I can go. And Janet, to your question is, as we started this journey, we had to incorporate all stakeholders in the bank, because from the word go, just selling the business case that it is profitable to serve women and to serve them slightly different is a journey that has to be accepted by everyone. And it was one of those conversations where even the credit team was like, why do you want to treat women differently? You're breaking the bank into two, so to speak. So as we adopted the credit methodology and we incorporated the credit team in the design, so they were on it from the word go. We went to the field with them. They interviewed the women with us. They understood the challenges the women were going through. For them to even accept that they can use records that are handwritten, it was a journey which they even sat in credit committees at the branch. So this journey of 7 years is because we needed to get everyone on the table to understand why is it different that for women compared to men. It's still a journey because the needs keep evolving. For the ones who are formal, it might be easier because they have similar structures like the men. But as we go down in the chain, we have to look for other ways of getting the credit team to acknowledge the difference. The micro and the nano women entrepreneurs are totally different from the formal ones. They're grouped in, they do business in groups, or they co-guarantee each other. How do we use those different aspects and different challenges of those women and incorporate it in our model that then becomes the risk model for the different levels of businesses? It's a journey. It's not complete. It keeps evolving. For the youth, like Rachel said, they're startups. They have no background. They have projections. How do you incorporate all that? So it's a journey. It's a journey, and it's evolving every day. The way it was 6 years ago is totally different. The scorecards keep changing. They keep changing.
Thank you. And I think what we often see is that there's sort of often an aha moment in an organization when management realizes that actually the women's needs are different to the men, that it needs a differentiated approach, and that I think the other key point is that the business case is strong, and it's not just a piece of CSR, but is actually a very strong business. And once you've got those three components and your senior leadership around it, the light bulbs go on, and suddenly you've got the support. So unfortunately, we're out of time, ladies and gentlemen. I'd like you to just give a big round of applause to the esteemed panel.